Start. Welcome to our webinar on drafting expat agreements. Hi, I'm Struan Mackenzie. I'm an expert in expatriate and employment tax with more than 30 years experience in developing and implementing practical solutions for international companies and groups dealing with global mobility and moving employees internationally. I joined Buzzacott in 2005 and have led our expatriate and employment team throughout the period. I'm joined by my colleague Kimberly Bradshaw.
Thank you, Struan. Hello, I'm Kimberly. I'm the Managing Director of Buzzacott's HR consultancy. I've been working in HR for over 20 years with a focus on improving businesses through their people. I'm particularly interested in cross-border HR and supporting both organisations and their individuals with the challenges around global mobility. To that end, Struan and I work very closely together to provide a complete service offering both the financial and HR elements of employee migration.
Thank you, Kimberly. Our webinar today is aimed at HR staff with an international remit, international payroll and pension specialists working with clients who relocate their staff, global mobility teams, specialists and for organisations which manage international relocations, executive level managers of small to medium sized companies who will need to manage expat agreements themselves, and small business owners looking to relocate their staff. What is an expat agreement? As many of you already know, when drafting an expat agreement, to ensure a successful assignment, there are many aspects to consider. These include why it is important to get the preparation right and the impact that this can have on both the employer and employee, business risks associated with international assignments and expat assignments and how to mitigate these risks, key considerations for the business before an employee is sent on an international assignment, and the best practice approach and top tips of what should be included in an expat agreement.
Before we kick off, let's have a look at what an expat agreement actually is. I'm sure most of you already have plenty of experience of this, but just to make sure we're all on the same page, an expat agreement is much like a contract of employment. However, the expat agreement outlines the specific details in relation to a particular assignment the employee is being sent on. When you send an employee on an international assignment, the expat agreement will normally be in addition to their actual contract of employment and will cover what is required of both the employee and the employer during this assignment. It is this agreement that is most commonly referred to as the expatriate agreement. There are various types of expat agreements that can be used, and what you decide to use will depend on your business needs. This is likely to be driven by tax, social security, and immigration requirements. We will be touching on these points as we go through this seminar. So now we know what an expatriate agreement is, let's start at looking at why they are so important. There are a number of reasons why you must get your expat agreements right. These include avoiding conflict, making sure the employee is doing the job, making sure the organisation is seeing the anticipated performance, and ensuring the employer is in control of the costs related to the assignment. You may have heard of a case from a few years ago where a developer in the USA outsourced his work to a company based in China for a fraction of his salary, and then he passed it off as his own work. He then spent his days surfing the web. It was only discovered when the company the employee worked for commissioned an IT security audit. Having a suitably worded agreement will avoid lengthy legal battles and provide protection for both the employee and the employer, as well as making it a successful assignment for the organisation and the assignee. Another reason an agreement is key is so the employer sees a return on their investment quickly. The last thing you want is the employee to arrive in the host country and spend weeks worrying about finding a school for their children or setting up an office that wasn't prepared for them. A client I worked with recently sent an employee on an international assignment, but failed to mention that the office wasn't fully set up. Although they had the basic equipment ready, they didn't have everything they needed in place. As a result, the employee spent the first few months really demotivated and setting up an office and putting in place agreements with suppliers. Financially, the client made a loss because they hadn't accounted for this in the first few months, because they hadn't fully thought through the situation as a whole or prepared the employee in advance. Having a suitable expat agreement in place will ensure the employee knows what is required of them before they travel, and they're prepared to get the job done, whatever it may be. Now, moving on to some of the financial aspects. Struan?
Thank you. Why is it important to get it right? Getting the preparation for an assignment can make an international assignment successful, as well as providing legal and financial protection for the employee and employer. For the employer, the impact will be the time and cost investment of all parties involved, as well as wanting to avoid the ultimate failed assignment. Looking at financial and budget controls are an important factor. An assignment incorrectly planned and accounted for will result in hidden tax and social security charges. For example, in the case of the UK, the cost of employer national insurance on benefits. A failed assignment can result in additional costs for leaving a rental property earlier than contracted. And as an example, I work with an organisation who brought their financial director over from the US. He left his large 6-bedroom house in the USA and wanted to have the equally dream house here in St John's Wood, London. For those of you not familiar with London, that's an expensive part of London. After much hunting, a suitable mansion was found, but within 6 months the family were unsettled and returned to the USA. As he was the financial director, you would have thought he would have been more focused on costs, but the costs to the company were over $1 million, as they could not release themselves early from the rental agreement. Under the expat agreement, the company were committed to the full rental agreement.
In our experience, expat agreements are easier to create and deliver when the finance and HR functions work together and develop them in tandem. Whilst these are the main parties involved, it might also be important to involve operations and the relevant teams or line management. Going back to the financial director Struan mentioned earlier, that's an example of HR and finance not communicating with each other effectively. Although they had considered the costs involved with the transition, there was limited involvement from HR, who could have helped set expectations from the beginning, supported the FD and his family settle into their new lives, and documented all of the required details into an expat agreement. Communication is key, and we touch on communication throughout this webinar. But it doesn't apply just to the employee and the employer's relationship. It also applies to the relevant departments involved in arranging the transfer. The better the communication, the more robust the expatriate agreement.
Preparation is key to a successful assignment. The impact of not getting an agreement correct will lend to a slow, disrupted start for the individual and inevitable demotivation, potentially leading to a failed assignment. The way to ensure the success of your employee's assignment is preparation. This means working together to make sure you have a meaningful expat agreement in place that works for you and your assignees. Getting the preparation for an assignment right can make an international assignment successful, as well as providing the protection for both parties. The following slides cover business risks and key consideration for businesses to ensure that your expat agreement and assignment is a success. Ensure your agreement is fit for purpose. There are many implications of not having an expat agreement or having an agreement that is not fit for purpose. lack of a suitable agreement can lead to numerous business risks. These fall into 5 main categories, and I will touch on these shortly. However, one area that is often neglected but which impacts on all the potential risk topics is the importance of good communication between the relevant parties involved in the transfer. It's quite usual for there to be internal communication between HR, finance, payroll, IT and other relevant staff in the host and home country. This must happen throughout the whole process, from the start, when considering whether there is a business requirement to send an employee on an assignment to the return of the employee at the end of the assignment. So back to the main 5 risk areas associated with international assignments. If managed correctly, these risks can be mitigated before an employee is transferred to the host country. The risks range from financial and legal risks to tax and social security liabilities, to a lack of preparation and cultural awareness of the host country, and the transitional issues for the families, which could have saved $1 million in the previous example. The last thing you want is not to have an agreement in place, or an agreement that's not tight enough and allows for misunderstandings to occur, or does not cover all the likely implications. Having discussions with the employee on what the assignment involves and what support will be offered can provide peace of mind for the employee, knowing that the agreed terms are in writing. All of this should make for a far more successful assignment in the future. Now let's look at the first business risk. Over to you, Kimberly.
Thank you, Struan. The first risk we are looking at is the employee. One of the key objectives is choosing the right employee. Global mobility can be very attractive for employees. However, as a part of the business justification, you need to determine whether to send an employee on an international assignment or whether to hire a local person to do the job. Too few organisations undertake a sound business case before deciding on the best steps forward, and they plough on with sending someone abroad. Using local employees with the relevant skill sets can be more cost effective than sending an employee on an international assignment. However, the importance of moving staff who already have the right business knowledge and key skills that can be utilised elsewhere should also not be underestimated in the value it can bring. I'm sure you've all encountered these conversations internally and looked at the business risks within your own organisations. Once you have selected the right employee, make sure you communicate the terms of the agreement clearly. Many organisations fail to understand how spending time preparing the employee for an assignment can make a difference to their bottom line. As we have mentioned, the importance of good communication cannot be understated. Not only does it ensure that the individual fully understands the situation, but will also ensure they are ready to face their new environment. Now we'll move on to look at some of the financial risks with Struan.
Thank you. There are a number of risks to a business in drafting an agreement. The lack of an expat agreement or even having a casual arrangement can be expensive and very disruptive. The financial risks are higher for the employer, as it is the employer who will be paying for the costs of the relocation, accommodation, benefits and relevant insurances such as medical and life insurance, as well as tax and pensions. In addition, there is also the cost of the time involved from internal departments such as HR, operations, finance and the other relevant work departments involved in the expatriation of the employee. This is where having a clear policy in terms of the expat agreement with the employee will avoid misunderstandings, overspending and any unexpected liability. Without having an agreement in place, the cost of helping the employee transition can escalate very quickly, especially if a disgruntled employee wants to take legal action. Having an agreement that captures the details of who is responsible for all the relevant financial, tax and social security liabilities can put the employee's mind at rest, as well as providing a safety net for the employer and employee, as both parties will be aware of their obligations. Recently, I worked with two individuals who had a word-of-mouth agreement in place. When formal negotiation commenced, they were surprised of the rising costs of expenses like housing and school fees here in the UK against those they had estimated pre-arrival in the US. It's important to have a budget in place to avoid budget surprises.
Let's now have a look at some of the legal risks. One of the key things to bear in mind when drafting an expat agreement is that the laws vary from country to country, and even from state to state, as in the case of the US. Using a generic agreement is not likely to provide the legal protection needed in sending an employee on an international assignment. While expat agreements generally have a clause that allows the law of the home country to apply, the host country legislation can render some of these provisions unenforceable. These are normally local statutes governing holidays, severance payments, mandatory notice periods, and restrictive covenants. A further potential risk is the inability to terminate the employee's contract due to accrued rights and dismissal laws. We recently worked with a client where an employee was sent to Japan, and after a number of years in this role, the client wanted to dismiss the employee. However, due to the strict dismissal laws in Japan, this was proving to be difficult and ended up in a legal battle. The client eventually made a termination payment wrapped up in a settlement agreement to settle out of court. As they hadn't got us involved soon enough, my client incurred a lot of legal costs in addition to the cost of the settlement payment itself. They hadn't accounted for this, nor the cost of all the time spent by senior managers, internal HR, and us in helping them come to a resolution. All of that could have been avoided by having an understanding of the relevant country's employment laws. Each expat you send on an assignment will need to have a suitably worded agreement that will take into consideration the laws of the particular country they are being sent to. Moving on to immigration, these requirements can be a huge risk to the business if not researched and planned very well in advance. Depending on what nationality your international assignee is, they may or may not be able to travel and work easily in the host country. So, be prepared to spend some time investigating options and different steps required to get the employee, and their family if relevant, all the necessary work permits. Let's now take a look at risks associated with tax and social security.
Thank you. The fourth of the risks we're looking at is income tax and national insurance. It's important to get this right and avoid non-compliance issues. Timing is key in both the home and host countries. For example, in Spain, you need to be registered as an employer, and the employee must be registered with the authorities the day before they start work. The UK will issue penalties and interest charges for the late tax withholding payment, so it is advisable to be aware of the local rules. Make sure that you have the most up-to-date legislation available to you. Here in the UK, the new statutory residence test is now very much an objective test. Previously, the rules were subjective. The old rules were not. So you need to be aware of current legislation to avoid possible additional taxation due to a lack of current knowledge. An example is short-term business visitors. We often see cases where employees have arrived on a short-term project for 2 months, but are still here 12 months later. Tax and social security issues then arise, along with the non-compliance of pay-as-you-earn, our withholding system. It is also useful to look back at the previous assignments to understand any pitfalls that could be avoided in the future. Now to look at the final risk area.
And that final risk area is cultural awareness and transition preparation. This is an area which is often overlooked, but it's important for the business to help employees adapt to the culture in the host country. It is a risk because it is one of the main reasons for failure of international assignments. Whilst there may be a certain way of doing things in the home country, there is likely to be a difference in culture and different ways of working in the host country. Even moving to a different part of the same country may have cultural implications, as each business location will have its own way of doing things, and there may be slight differences to how they embody the corporate culture. Some employees find it easier to integrate into a country where the culture is completely different to their home country, rather than one which is relatively similar to their own, such as between the US and the UK, for example. Supporting employees with the transition can assist them with understanding what the different cultural and ways of working are, which can help mitigate your risks. The ultimate risk, of course, is the failure of the assignment, as I've mentioned. As well as preparing the assignee, their family should also be supported with the transition. Family issues are one of the other main reasons why expatriate agreements assignments fail. These issues include family members not integrating well, or changes in family circumstances during the assignment, all of which can put huge pressure on the assignee. From my experience, school costs are often a key area, as most employees will wish for their children to continue in the schooling of the home country, and problems often arise when there are no clear agreements in place. For example, I often see issues when additional costs are incurred for study materials, school trips or meals and the like. Who is responsible for these costs? Is it the employee or the employer? Or what happens when you have more than one child, or a child becomes of school age during the assignment? These types of issues can easily cause conflict between the two parties. All of these elements should be considered and included into the expatriate agreement. Now we've looked at the business risks, we're moving on to the key considerations when drafting an expatriate agreement. Struan.
The 5 main topics we're going to discuss are legal, financial, cultural differences and awareness, ongoing communication and termination arrangements. We will now explore these areas in more detail in relation to the expat assignment agreement. Back to you, Kimberly.
Thank you, Struan. So let's start with some legal considerations. As mentioned earlier, a part of the business justification will require you to consider the value of sending an employee on an international assignment rather than utilising the skills of a local employee. One of the benefits of using a local person is avoiding the complications related to work permits. However, where your business requires you to send an existing employee on the international assignment, you should check if he or she has the necessary permissions to work in the relevant country. Not only does this include his or her immigration status, but also their medical status. For example, in the Cayman Islands, a person who will be working there for more than 3 months is required to complete a medical questionnaire and undergo a medical examination. Copies of the reports arising from these have to be submitted along with their application for a work permit. So depending on your employee's immigration status, applying for and obtaining a work permit may take anything from a few weeks to a few months. So, prepare the relevant documentation well in advance and certainly don't leave it to the last minute. If the employee is moving with his or her partner and children, they are also likely to need a relevant permit to stay or work in the country. You will need to agree if the employee will pay these costs or if it will be paid by the organisation, and these also need to be included in the agreement. As with many of the challenges we're talking about, good communication is essential to make everything run as smoothly as possible. Carrying on with the legal side, who is the assignee's employer? This will depend on what has been agreed and what can be done within the limits of the law. For example, the employee can remain employed by the home country entity and perform services for the host country entity. They can be employed directly by the host country entity on a temporary basis, or they can be employed by both entities at the same time. Within the EU, although the law varies by country, in the absence of a clear choice of law, the terms of any agreement will fall on the legislation of the country in which the employee will be working. If you had said earlier the agreement will be governed by the laws of Michigan and the employee will be working in the UK, this won't work. It is recommended for employers to get professional assistance to ensure they are aware of all laws in both the home and the host country. This is key for tax and HR, as it could involve high penalties if local laws are not followed on areas such as employment, health and safety, as well as tax laws. Struan's now going to take us through some of the financial considerations in more detail.
Key considerations for the business: financial. Before the employee leaves for the assignment, there should be clarity within the expat agreement on which employer, the host country or the home country employer, will pay the employee's salary and which country's benefits the employee will be entitled to, as this will have a knock-on effect in terms of tax, social security and ultimately the financial cost. Clients should consider if it is worthwhile to keeping the expat in the home country's share schemes, pension, etc., which if they change to the host country schemes could cause issues for visa application and tax planning. In all respects, having the right wording in the expat agreement is important. In regard to any tax relief, ensure that both parties are aware of the rules and are able to follow them. It's key to having communication links between home and host payroll. You could have situations where the employee wishes to continue in the US 401k scheme, US pension scheme, and will continue to pay US Social Security, but his net pay is paid in the UK. It's important both teams work together to ensure that the correct tax and social security agreements are in place, any reliefs claimed where necessary to avoid non-compliance issues. One of the recent cases I was involved in was a transfer from Switzerland to the UK. Locally, they had agreed that a Swiss employee could work out of the UK office. She came to the UK, worked out of the UK office for some time and continued to pay Swiss tax. Some months later, when she wanted to claim expenses, that's when the UK realised she was working here in the UK, and no one had considered the impact of tax and national insurance. It was a costly exercise that could have been avoided or flagged up in advance through clear communication or through the expat agreement. Another raise in trends is employees moving countries with their spouse and continuing to work from home. As we know with IT nowadays, we can work anywhere, but consideration must be given to how this will impact taxes and social security rules on where the work from home location is. I see so many cases where the company have simply carried on with the home location contracts and withholding without realising that the employee is now hidden, but local tax and social security needs to be considered. So what's the financial impact on pension, benefits, social security and tax? As previously discussed, it's important to look at the home and host countries. Taking a look first on the impact of pension. Pension relief available in the home country may be different to that of the host country. Where possible, employer matching contributions can be seen as part of the remuneration costs. Looking at the US and 401k plans, if the employee continues to pay, will he still receive the same tax relief in the host country? Or would it be worthwhile stopping contributions until he returns home? Both questions should be asked. In respect of social security, taking account of the social security agreement, often the employee can continue in the home scheme. This does not only benefit the employee, but the employer who may have incurred higher costs if moved to the host country social security. For those seasoned expats who travel around the world, they are keen to ensure they maintain their pension and social security rights in their home location, which stops issues when they come to retire and having to consider small pots of pension and social security in the countries they've worked in over the years. Tax relief, as discussed already, it's key where possible that reliefs are taken through payroll, which will benefit the cash flow by not having to wait for refund of taxes where overpayments occur, to avoid surprises in respect of any tax underpayments at the year end. Other financial factors to consider are exchange rates, intercompany and accounts reporting. So now let's look at those in a bit more detail. Exchange rates are always a subject that is often discussed in great detail. It's normally linked to the cost of living allowance. A cost of living allowance is compensation or earnings that's provided to the expat and is like a basket of goods purchased from a supermarket in the home country and compared to the same basket of goods purchased in the host location. If we take as an example the US, buying groceries in the UK similar to those bought in the US would be more expensive. The employee would expect to be reimbursed. However, it's important to note as the assignment progresses and as part of the whole experience of living in the host country, the assignee should be more used to buying goods locally. So my advice is to only offer cost of living for a fixed period. Often we are asked how often we should review exchange rates. There are no fixed rules, but be cautious in fixing rates long term, as this could affect budgeting at a later date. It's always worth remembering that markets can be favourable, but can drop without much notice. Looking then at intercompany reporting for an employee, it's normally agreed that the employee is loaned from the home country to the host country. Both parties will have to have a clear accounting process and considering the cost plus value for transfer pricing, which meets both parties' statutory accounting regulations. Now we've looked at the financial considerations, let's review some of the issues employees need to be aware of around cultural awareness.
Earlier, I mentioned how cultural awareness and transition support was important for the assignee and their family. But how do you deliver this type of support? We've supported transitioning employees with coaching programs, both face-to-face and web-based through applications like Skype. Typically, this kind of support is provided for a set period of time, which starts before the move and continues for the first few months of the assignment. The type of support you might want to offer will depend on where the employee is being relocated to. Transition and cultural coaching will ensure the employee understands the differences between his or her current office environment and the new office. So examples of differences might be the dress code or day-to-day working practices. This coaching will allow employees and their families to discuss any concerns and to work on practical ways of overcoming the discomfort of culture shock. Not long ago, I went to meet the MD of a huge manufacturing plant. This was because there were a great deal of problems such as absenteeism, dissatisfaction, arguments with the managers, and production had dropped significantly. The MD was fairly new and wasn't from the UK. Where he had come from had a very direct manner of doing business. It was easy for me to see that what he perceived as him being efficient was seen by the workforce as him being aggressive and demanding. He actually wasn't being either. Instead of paying for a costly workforce development program, which is what they initially asked for, I ended up coaching the MD, looking at his communication style, which helped him slowly change his approach to get the best out of his team. In addition to the more formal support provided by coaching, the employee and family should also have a named point of contact in the home country. This would normally be a line manager and/or someone in HR. But there are other types of support that the families might require. Pre-assignment language support, where necessary, can help boost confidence in both business and social situations. And helping family members look for work opportunities, where they have the legal permissions to do so, may also help with networking, and that can also be invaluable. Offering pre-assignment visits to acclimatise themselves to the local environment is helpful. It gives them the chance to look for housing and finding schools, which can remove the worry families have of finding suitable education for their children. A little while ago, we worked with a client who wanted to transfer an employee and his spouse to the UK from the US. They engaged us to provide support to the spouse. Our coach worked with the spouse initially via Skype and then met face-to-face once they'd relocated to the UK. They talked through all the areas they needed to consider, such as finding a new job and making friends. The coach provided advice on CV writing, tailoring it to the UK market, and career transition as a whole, which resulted in her finding employment in the UK. Building these aspects into any agreement and involving the family is key to the success of any assignment. Moving on, the next consideration is communication. Both Stuart and I have touched on this, and in this case it's related to performance. First, determine who is managing the employee. If the employee has a line manager in the host country and a line manager in the home country, one manager will have to have overall responsibility. They should also have regular communication with their employee. Some of you may have heard about the case in Spain where an employee was forgotten for 6 years. The employee, who was posted by his company to work at another company, eventually stopped attending work as he had nothing to do. He didn't tell anyone, and each company thought the other was supervising him. It was only discovered when his employer was due to present him with a 20-year long service award. A legal case was launched against him, and he was fined 1 year's salary after tax. Once the employee arrives in the host country, a really strong onboarding process is important to help him or her ease into the new role. A good onboarding process should include time to discuss expectations for the first 3, 6 and 12 months, depending on how long the assignment is, obviously. There should be time built in to allow the employee to settle in and get to grips with potential new technologies and ways of working. This is especially important if objectives are linked to performance payments. Thinking back to my example of the individual who arrived to find the office not set up and ready, make sure that the 3-month objectives reflect what is feasible for the situation. Once an appropriate amount of time has been given for the employee to settle in, objectives should be set in the normal way. In other words, establish performance standards by setting objectives, communicate expectations to the employee, discuss the appraisal process with the employee, and measure their performance against those agreed standards. For avoidance of doubt and conflict at a later stage, the assessment criteria should be made clear from the beginning. An employee who understands what is expected of them and has the right tools to do the job is more likely to perform well and therefore improve your bottom line. If priorities change over the course of the years, objectives should be amended accordingly. Continuing with communication. While support is important in helping the assignee to settle into their new environment at the beginning of an assignment, it is just as important to support them at the end. Repatriation can cause unforeseen challenges, especially if it's been a long-term assignment. Many repatriates find it difficult to reintegrate with their home country's way of life after adapting their lifestyle for a long period of time. A client I worked with called me in to support them with a long-standing senior member of staff who was performing very poorly and whose conduct was becoming an issue. Once I delved a little deeper, it transpired that the employee had recently returned from a long assignment abroad and had been so integrated with the host country's way of working and for such a long time that he was struggling to change his behaviour and culture to what was acceptable back home. With some coaching, the employee reverted his working style back to what was appropriate at home. Many employees worry the new knowledge they gain may not be as useful in their home country. This can cause them to feel undervalued when they return home. It is very important to set clear, realistic expectations about post-assignment career advancement and compensation. By providing support, the employee can better reintegrate with their old life and environment and feel that they are making a valuable contribution to the company. We would recommend that for long-term assignments, repatriation support should begin at least 6 months before the end of the assignment. Again, details of the support should be contained in the expat agreement and discussed with the employee before they return home. Now we've covered the support elements of repatriation, let's look at the financial and tax implications of an assignment ending.
Terminating an expatriate contract can be as complicated as creating it. With all the best planning, often we cannot predict unscheduled leavers. The expatriate may move to a rival company, may want to leave for personal reasons, or the company restructures. All are not planned, but with a carefully worded termination agreement in place, costs can be minimised. The expat agreement should include the grounds for termination. That's getting the language clear, and it should include associated notice period and terms to prevent any issues at a later stage. If this is not included in the agreement, it may become difficult to determine which country's laws should be applied, especially if the host country's laws must be applied in line with the country's employment legislation. This may then have an impact on the notice period and the amount of severance pay, if any, that is given, and the taxability of those payments. The agreement should contain clear details of both the employee and employer's post-termination obligations linked to the reasons for termination, i.e. what happens in the eventuality the employee resigns before the end of the assignment or is dismissed. It is most common for employees to lose all the benefits under the agreement if they resign or are dismissed with cause, e.g. for gross misconduct, and normally would not receive any repatriation support. In such instances, it should be clear if there will be any clawback of any monies. For example, if the employee has children attending an international school in the host country, who then pays the bill between termination and the end of the school contract. I often see cases where on termination there are some tax credits that have built up whilst the employee has been on assignment. In these cases, who will benefit from the future credits? Does the company seek agreement with the employee? Termination, be it voluntary or involuntary, there are so many factors to be considered, and professional advice should be sought to avoid unnecessary claims and expenditure. What else should be considered to make your international assignment successful? Well, you can compare yourselves to your peers, so what are other companies doing? Explore your network and HR groups you belong to gain knowledge of current trends. Often it's good to talk, as well as an opportunity to learn from each other. We often forget the wealth of knowledge we have available in-house, our experience from past assignments, what we have learned, what we can do better going forward, and how we can challenge people's views. So always challenge.
So what are the crucial components of an expatriate agreement? Based on our experience and best practice, we would recommend you have the following in it. The duration of the assignment, who will pay the salary and benefits, so is that the host or the home country? Details of how tax liabilities will work, and what happens with any pension contributions. Also include details of what constitutes an emergency if the assignee needs to return home, and how frequently he or she can return home. This should also be included. Then look at the benefits. Consider the relocation costs and whether personal items will be shipped or if the employee will have an allowance to buy or rent furniture. Details of the cost of living allowance and how long it will go on for, as well as schooling options if needed, are also important. Then there's the type of support families can expect to receive, whether pre-agreed or miscellaneous. And also what happens if the contract of employment is terminated by either party before the assignment naturally comes to an end, as Struan has just mentioned. And of course, any repatriation support. Our best practice advice is to limit your exposure to the business risks by putting into place a global mobility policy. Although there is no one-size-fits-all, a general global mobility policy will allow assignees to be treated the same and receive the relevant support for their particular assignment. But remember, each employee's assignment will need to be managed on a case-by-case basis. Don't forget to do your research. The kind of areas you should be looking at are understanding the laws of the country you are sending your assignee to, benchmarking salary and benefits appropriately, and understanding the culture of the host country. Provide transition support to the assignee and their family if appropriate. This will help them settle in quickly and allow you to see a return on your investment much faster. And finally, issue an expatriate agreement. Make sure you discuss the details of the agreement with the employee before the assignment and make sure this is all mirrored in the agreement. So let's now finalise our discussions from today.
So to summarise, how to make a success of your international assignment through expat agreements. And as Kimberly just mentioned, always have a written agreement in place so there are no misunderstandings and expensive errors before the assignment commences. Ensure the agreement is compliant with the home and host location and all relevant statutory regulations. It's important to have communication links in place between the home and host location, so ensure compliance in all areas of tax, HR and legal reporting. Also ensure you keep up to date with the legislation changes and work closely with your internal and external contacts to ensure you're aware of any further changes which may impact future costs. And finally, and most importantly, keep in contact with your expatriate employees so they don't feel isolated and forgotten. From my own experience of working overseas in the US, I found the whole experience not only enjoyable on a personal front, but also worthwhile for my career within tax. So although for many looking after a small group of expatriates, it's challenging and often more time consuming than the rest of your workforce, it's worthwhile to ensure a successful assignment outcome. Thank you.
Thank you.
If you have any questions, please do get in touch.